Hi, I'm Will from Heartland, and I'm here with my colleague Mike Warecki, who's a associate portfolio manager on the Heartland Value Fund and Heartland Value Plus Fund. Thanks for being here, Mike.
Yeah, thanks for having me.
So one of the reasons I've been doing these video series is to try to bring to life our investment process, our 10 principles of value investing, and that's what Mike is here to do today. Are you ready?
Absolutely.
All right, cool. Where are we?
Well, we're currently standing outside of the Restoration Hardware Outlet located in the historic 3rd Ward of Milwaukee, Wisconsin. Now, unfortunately, we don't have a formal RH gallery here in Milwaukee, but if I wanted to visit one of those, I'd have to travel about an hour and a half south of here to the lovely Gold Coast of Chicago.
So it's a really cool store, but why has RH stock been so weak over the last year?
Yeah, RH has been underperforming year to date. In fact, the stock is down over 50%, but that's mainly due to outsized tariff exposures that come with participating in the furniture industry. And then also, the stock has been experiencing a little bit slower sales growth in this environment, which has to do with having exposure to slower housing turnover.
Yeah. So do you think some of those headwinds, housing turnover not being as quick as we like, and the tariff uncertainty are now discounted in the stock price today?
Yeah, they very well might be, with the stock trading near our downside target. Certainly, investors' expectations for sales growth going forward are muted at best at this point.
So there's a lot that they can't control. We touched on that. But in terms of things that they can control, it's some of the catalysts that we've been tracking. How have they been going over the last year or so?
Yeah, there's two key criteria that we've been focused on that have to do with sales growth and margin expansion. On the sales growth side, we've been looking for RH to continue to take market share within the industry, and they've been doing so, growing same-store sales at a positive 5% clip over the past 2 years, which has outpaced the industry by about 2%. And we're also looking for RH to be able to execute on a pretty significant margin expansion opportunity. So RH has been investing heavily into growth within new markets, especially within Europe. You may have seen recently that they opened a store in Paris, but we expect CapEx going forward to be more modest, and that gives them an opportunity to really lever their operating margins as those new stores open abroad.
So you touched on a lot there. Valuation, the downside target, that's really important to us. Understanding the risk with the story is as important, if not more important than the upside potential. You touched on the catalyst, for instance. So a couple of our 10 principles of value investing. If you want to learn more about the RH story, check out our website. Thanks for watching and take care.